It's a unique milestone for the company. In a very short span of 8 years, which includes 2 years of COVID, Smartworks has emerged as India's largest managed campus platform. Today, we manage more than 10 million square foot spread across 14 cities. The unique model that we've built, which focuses on leasing large campuses and getting large enterprises, positions us well for the next leg of growth. At this point in our lifetime of the company, we believe IPO would provide us the necessary growth capital to scale up our business even faster, ensure that the other ancillary businesses that the business intends to expand on also gets the right leg. Through this IPO, the company is also going to enhance its profitability because we are repaying some high-cost debt, and one of our early backers is offloading a very small stake. We also want to ensure that we are rewarding them for the support that they've demonstrated throughout this period. To just share some perspective, our primary minority investor, Keppel, decided to reduce their OFS, which indicated to us their longer-term orientation in the business. We followed suit as well. The reduction of the OFS reduced the offer size. During this corresponding period, the company has scaled up and added more than 1.96 million square foot through its internal sources of capital. This further reduced our need for capital, and therefore at this point of time, this capital will be adequate to support the next leg of growth that we have.
I think last 3 years there's been a significant growth, not just in footprint but also in revenue and our adjusted EBITDA numbers. If you look at our footprint, we were at about 6 million square foot of space back in 2023. That number has grown to almost 9 million square foot of space, of operational space as of March of 25. Our total signed up properties have grown north of 10 million square foot in the short span of 2 years. In this, while our revenues have also shown a significant amount of jump, from 711 crores of revenue, the revenues have grown to almost 1370 plus crores. So almost 1.7 times jump in revenue as well. With the healthy growth in revenue, there is an even healthier growth in our adjusted EBITDA margins. If you look at our margins, they've grown from 32 crores to 172 crores, which is a 350% growth in the EBITDA margins itself. So the last 3 years, there has been base expansion, there has been revenue expansion, but most importantly, there has been a significant amount of adjusted EBITDA expansion. We can tell you on a year-on-year basis on how this has really trended. We were closer to about 73-74% back in 23. That number has traded more towards 83% as we speak, as of March 25. So you'll see a significant jump in the total occupied area. The total occupied area is also a function of the number of centers that we've added. So there has been a significant increase in the square footage also. If I have to give a number of the total committed occupancy that we have for all our operational centers today, we stand at more than 88% commitment, on all our operational centers. So you see there is healthy demand for this product, and it's continuously getting bigger and bigger. I think our model is a little unique on how we position it to our clients. Smartworks as a model takes up large individual buildings from non-institutional landlords. We take these large assets ranging from 100,000 to 600,000 on an average, and a Smartworks asset is more than 180,000 square foot, with some of our four of our assets being larger than 500,000 square foot. So we take up these mega buildings, we build it out like a campus. So we'll build out all the amenities that you typically see in a large MNC's campus, with a gym, an outdoor gaming area, indoor gaming area, cafeteria, crash, yoga centers as common amenities in our facilities, before custom making through our standard offering, building and maintaining the space for our large corporate clients. Today, more than 88% of our revenue comes from enterprise clients, and more than 63% of our revenue actually comes from clients who've taken more than 300 seats. When you really contextualize this, it means that our focus is more towards mid to large enterprises. These enterprises are more stable in nature. They commit to tenures of more than 50 months at any given point of time. And Smartworks specializes in the mid to large segment. We see 90 to 95% of India's demand comes from the top 7 cities. We are going to see a significant amount of we've seen a significant amount of growth in the last 3 years within those cities only. We have forayed into a couple of tier 2 cities, but those are with smaller bases. While we have had the opportunity of growing our footprint from 10 cities or 11 cities to the 15 cities that we are in, most of the growth has happened in the tier 1 cities, which is where most of India's commercial real estate is.
No constraint as we see with the scale up of our business with regards to either supply or demand. At this point of time, as long as India continues to be the office to the world and a lot of domestic companies continue to grow, Smartworks, with its unique positioning spread across 14 cities, can only be more and more eager to continue scaling up and growing. More than saturation, we see this more as an opportunity. And in a post-IPO environment, the company will look to continue scaling up our platform and also explore other monetization opportunities.